Hey everybody, welcome to Trading Capital's daily analysis video on cryptocurrency, gold and silver. We're going to jump right into the Bitcoin chart here on this Monday, May 23rd. So Bitcoin has been struggling. It has been struggling to close and hold the 30,000 level. And if I simply move up this trend line to the 30,000 level, that is really the next resistance that we have been struggling. You can see here, ever since that initial drop, we've come up to test it, pierced it, closed below. Pierced it again, closed below. Reverse it, closed below. Pierced it again, closed below. Pierced it again, reverse, closed below. Pierced it again, closed below. And we just keep having these reversals all the way off of that 30,000 mark. And if you look at the intraday action, you can see, let's just go to the hourly chart. You can see this constant struggle around this yellow line here, around this 30,000 level, and Bitcoin cannot just hold it. So the analysis on Bitcoin, the technical analysis and what is transpiring right now. Right now, you still have a short-term macro pattern like this, which we're going to draw in, that could potentially be a bullish short-term formation. However, as each day progresses, this pattern is getting more and more favorable to break down to the downside. So this pattern is getting really long in the teeth, and we really need to see Bitcoin this week break out of this flag formation to move higher. If it does break out, then it stands to suggest you have a great shot at coming to fill this gap around the 35,000 level. There will be resistance levels along the way around 33, a minor one here at 34, but this gap on Bitcoin, once you get through this upper resistance trend line, you could have a highly probable move to this 35,000 level. And that would be good for our crypto positions, but we really need to see Bitcoin stop chopping in this price action and needs to make a move up higher sooner rather than later. And what's interesting is that the stock market, the indices had a rally today. Tech did lag a little bit. I mean, there were pockets of tech that were hotter than others. You know, for the likes of Amazon was down most of the day. It did rally back, but Apple had a tremendous day. Microsoft had a phenomenal day. So some of the bigger caps certainly were stronger than others, but nonetheless, I was looking to see if Bitcoin was going to rally with the indices, and we really didn't get that. And for it to give up basically all of its gains throughout the day and head back down to the lower range, even though the S&P and the QQQ finished pretty much near the highs of their days, that's not a very good sign for Bitcoin in the short term. A positive sign that you can look to Bitcoin for is the fact that you are making a little bit of a higher low here. Higher low, higher low, higher low, and higher low. So that's really the only positive I see at the moment for Bitcoin, other than the fact that you are making a series of higher lows. If you do flip to the daily, you are on that 1, 2, 3, 4, 5, 6, 7, 8, 9 days, 9 candle count, a weekly candle count to the downside. So that's a tremendous fall in Bitcoin, and the odds do favor that bounce continues, but we really need to see it happen sooner rather than later. Jumping into gold, gold finished positive on the day. Mind you, this candle will close in an hour and 27 on the gold chart, but nonetheless it is positive. You're getting follow through. Notice how it hit our support line here, where we added to and picked up the GLD. So we are in the money on the GLD by a few percent. There is the chance that gold can come up to test this 1900 area in line with this arc, and then fall back down to potentially form another double bottom scenario. So it could come up and then back down to form potentially two double bottom areas that we can now trade off before it breaks up. So what could take gold down over the coming weeks? Well, if the recessionary fears pick up, and if the housing data starts to show more negative divergences, then that could certainly spook liquidity out of the markets, and gold is a very liquid assets. Generally, people don't think they'll just sell to cover other investments and potential margin calls and whatnot, but gold is very liquid, and all liquid investments generally get hit when there's a liquidity crisis or potential decline on the horizon. So we'll just have to monitor gold. I am comfortable holding it longer term, so even if it does go lower, I am more than comfortable accumulating a larger position. It's still relatively a very small percentage of our portfolio, and I am comfortable taking gold a lot higher, and we'll just have to slowly accumulate a position. If it does go lower, if it does go higher, we were already in, we'll bank a profit. But I do think over the coming months, we do go higher, but there could be some short-term fluctuations in the price of gold as assets still continue to find their price discovery. Taking a look at silver, we are in the SLV. Silver did have a strong day today, I believe, but it reversed its gains. So that's not really a bullish sign for silver in the short term. You still have that massive oversold condition, but you have had a bounce. The question is now, are we just going to consolidate sideways, potentially running under this longer term resistance trend line before breaking higher? That's certainly a factor. Or is the decline going to come in a lot fiercer and pretty much negating some key pivots here at 2130 and 20 to potentially forming, more of a bear flag pattern? So we'll just have to monitor it day by day. Again, silver, I am comfortable holding it. The one thing that could take silver down again too is the recessionary fears. If there's a slowing economy, remember, silver has 50% of its demand comes from the industrial side, which is due to electronics, medical systems, solar, etc. So electric vehicles, ICE vehicles. So we have to keep in mind that if we start hearing the recession word thrown around the mainstream, slowing economy, declining GDP numbers, silver is likely to take a hit, but it still does have that monetary aspect that could help prop it up a little bit better than other assets per se, due to the fact that inflation is soaring. But you can see here silver is under pressure. If we flip to the intraday basis, it's not good to see a sell-off like that. For it to not be able to hold its gains in an oversold condition is not really good. And you are trading below the 200, so that's in a technical decline. You are making a series of lower lows, and I do believe that this 1965 area on the SLV aligns with a gap fill. So I do think you could have a strong chance of going down here, but I will again be gladly to add to my silver position and accumulate it for the long term because inflation will be sticky. Silver generally performs well in inflationary times, but it definitely has to have a little bit of that economic backdrop that supports it. So hold on to our SLV. We are slightly, I believe, in the money on our GLD, our SLV, and one of the things I want people to remember is I was never really a big proponent. When I was an investor in my earlier days, and now I'm a trader and an investor, but more so a trader, a swing trader. When I was an investor, I swore I would never touch the SLV. I would never touch the GLD for an investment vehicle because it's the papers market. It's not really backed by anything physical. And a lot of the times the investment thesis for owning precious metals is the fact that it's a physical, tangible asset backed by real value. And when you're trading the SLV and the GLD, you have to remember that you just have a paper IOU contract that would likely be settled in dollars. So you don't really own any gold or silver. It's just tied to the actual spot price. There are other ETFs like PHYS or PSLV, the Sprott ETFs, that you will own physical gold if you buy through them, but the GLD SLV is all papers, and that's why it's important to also keep physical in your possession, and that's why I'm comfortable trading these paper ETFs, because I know that I do have physical investments in other places. So therefore, I'm just looking to be in and out of these trades for the short term, versus I do hold longer term metals, which are kind of the insurance policy for one's portfolio in the event that who knows what could happen. The technology goes down for a week. We have massive power outages across the world. I mean, there could be a cyber attacks. Realistically, there are so many things that have surprised us that we never ever would have considered in any sort of SWOT analysis as a potential threat or weakness. COVID, the pandemic, quarantines, lockdowns. So many variety of factors. QR codes for vaccination passes. Certain people can't, access places around the world, which obviously hurts the economy. If, say, you had a percentage of your population who aren't vaccinated and basically can't participate in some of the consumer discretionary activities, that hurts the economy on some level. And yes, it might be a smaller percentage of the population, but it does impact things on a dollar by dollar basis or on an economic basis. So just little nuances like that we've had to really account for when we analyze investments and trading has really, really sharpened, I think, a lot of people's skills, and it's brought more awareness in terms of how deep our analysis has to go. So again, silver could take a hit, more so than gold, if the economic conditions continue to decline, which I do think they will. But again, when I trade silver, I know there could be big moves in either direction, but even if the trade goes south, there's still that longer term bull thesis, which is always nice to have behind you when you're trading in the short term, because you pick wrong trades. It comes with the business. You just have to be able to move on and reassess. But it's always reassuring when the longer term macro picture for metals is bullish, that even if you mess up in the short term, you always have that flexibility to hold on to it and just turn it into a longer term investment that you will hold its tangible value over time. Thank you everybody for being members. Please like and subscribe to my YouTube channel. We need all of the likes and we need to be picked up on the YouTube algorithm. So if everybody can give this video a like or a comment on the bottom. If you have any questions about specific stocks that you would like some in-depth analysis, I will certainly try to include them in my weekly analysis videos. I am planning on making a blockbuster real estate analysis video that I think everybody should be tuning in for. I should have it out sometime this week, just depending on when I have time to make that video. But it's going to truly be a very informative video. There's going to be some math involved, some hard numbers, some data, some charting, and really a good thorough analysis of what we could be expecting over the next 12 to 24 months. So I think everybody needs to pay attention to real estate next, because it's going to be, it's still one of the biggest bubbles out there. And if it pops, and I'm in the camp when it pops, it's certainly going to be the anchor that drives and sinks everything else, because it holds so much money as an asset class. And not only does it hold so much valuation as an asset class, it makes up the demographics that really move the economy in the sense of the goods and services that they buy, the lower and middle class. Really, as a whole of the population, it's a massive, massive number of families that have their money tied up in that one sole asset class of real estate. So stay tuned for more. Thank you all